All right, ready to dive in. We're tackling Ray Dalio's economic outlook today.
Oh, this can be good.
Yeah, he doesn't sugarcoat things, does he?
Nope, not at all.
For those who don't know, Dalio is the founder of Bridgewater, associates the world's biggest hedge fund.
Yeah, they specialize in this thing called macro hedging.
Right, so he's looking at the big picture, like global trends, economic cycles, that sort of thing.
Exactly. And his predictions have a way of, shaking things up.
For sure, and in his latest interview, he seems particularly worried about the U.S. and the whole debt situation.
U.S. debt, yeah, and what it could mean for the value of the
And
dollar.
this is what you wanted to unpack, right?
Yeah, that's what got me hooked.
Me too. So where do we even begin with this?
Well, Dalio starts by saying, everyone's freaking out about Fed rate cuts.
Right, that's been all over the news.
But Dalio's like, hold on, that's a distraction.
Interesting. So what does he think is the real problem then?
The national debt, which is $35 trillion right now?
35 trillion. With a T, that's more than the entire economies of, a bunch of countries combined.
It's mind-boggling, and, economist Stanley Druckenmiller, he estimates the real burden could be way higher.
Oh, no, don't tell me. 100 trillion.
Try 200 trillion.
200 trillion.
When you factor in, future obligations like Social Security and Medicare, it's a whole other level of debt.
Okay, so we're officially in terrifying territory now. What does Dalio think will happen with all this debt?
Well, he thinks the U.S. might end up doing what Japan did.
Oh, no, not that whole lost decade thing.
Kind of, yeah. He's talking about debt monetization.
Okay, break that down for me. What does that even mean?
So basically, the Federal Reserve creates new money.
They just print more.
In a way, yeah, and they use that money to buy up government bonds.
So the government owes itself money.
Kind of. It's more complicated than that, but the point is it pumps money into the economy, which helps the government manage its debt in the short term.
But isn't more money in the economy usually a good thing?
Not necessarily. If everyone suddenly had $1 million, a dollar wouldn't be worth much. Right?
True, everything would just get more expensive.
Exactly, and that's what Dalio's worried about.
So he thinks the dollar could lose its value.
He's pointing to Japan, where their bonds have lost, get this, 90% of their value.
90%. That's a disaster. So our savings, our investments, they could all be worth way less in the future.
That's the fear. And it all comes down to trust.
Trust. What do you mean?
Currencies aren't backed by anything tangible anymore. It's all based on faith in the system.
Right, we all agree that a dollar is worth something.
But when central banks keep printing more and more money, it erodes that trust.
And then people start looking for other things to hold their value.
Exactly. We're already seeing signs of this globally.
Oh, like what?
Well, look at gold. Prices have been skyrocketing lately.
Yeah, I've heard about that, but what does that have to do with anything?
Investors are looking for safe havens. They're moving away from traditional currencies.
Because they don't trust them anymore.
Right, and that's why Dalio's been recommending diversification.
Diversification, like investing in different things.
Exactly. Spread your risk. Don't put all your eggs in one basket, especially the U.S. dollar basket.
So where does he recommend putting your money then?
Well, he's bullish on emerging markets like Southeast Asia, India, China.
China, really? But what about all the problems they're having?
We'll get to that, but Dalio sees potential there, long-term potential.
Okay, so emerging markets, what else?
And he's cautious on long-term bonds, especially with inflation looming.
Makes sense. They get hit hard when prices go up.
He's suggesting shorter-term opportunities where you can be more nimble, react to changes more quickly.
So it's all about agility, having a backup plan, basically being prepared for anything, right?
Right, and this is where Dalio's analysis gets even more interesting.
Oh, can't wait.
He sees the 2024 election as a potential turning point.
Uh-oh, that's a whole other can of worms.
Right, and he's particularly worried about the deepening political divides in the U.S.
Yeah, it feels like everyone's picking a side and digging in their heels.
And Dalio believes that's a recipe for economic instability.
So what does he think needs to happen?
He's advocating for centrist policies, finding common ground.
Easier said than done, I guess.
For sure, but he's warned before about the dangers of internal conflict when economic hardship combines with political polarization.
So the stakes are pretty high, not just for the election, but for the entire economy.
Absolutely, and I think this is a good point to pause and take stock of what we've learned so far.
Yeah, we've covered a lot of ground.
From the sheer scale of U.S. debt to Dalio's concerns about potential currency devaluation.
And we're just getting started.
Right. We still need to unpack his views on China and his advice on individual stock analysis.
Can't wait. But for now, I think the key takeaway is that Dalio is urging us to be prepared.
to understand the potential risks and to take steps to protect ourselves.
Don't bury your head in the sand.
Exactly. Knowledge is power, especially in these uncertain economic times.
Couldn't agree more. Well, we'll be back soon with part 2 of our deep dive, where we'll explore Dalio's take on China and his insights on how to potentially profit in this crazy, unpredictable landscape.
Stay tuned.
Welcome back. So last time we left off with Dalio's rather grim outlook on the U.S. dollar.
Yeah, not exactly sunshine and rainbows.
But he seems to have a different perspective on China,
Right. He's cautiously optimistic about their long-term prospects.
even with all the challenges they're facing, like the real estate bubble, the trade tensions.
Yeah, he acknowledges the risks, but he sees a lot of potential there.
So what's he seeing that maybe others are missing?
Well, Dalio is a big believer in historical cycles, looking at patterns throughout history.
Right, he's always talking about those.
And he sees parallels between China's current trajectory and the economic development of other nations.
So he thinks they're on a similar path,
Yeah.
even with all the bumps in the road.
Yeah, he points to their work ethic, their commitment to innovation, and their track record of bouncing back from adversity.
Okay, so he's basically betting on their resilience, their ability to adapt.
Exactly. He believes they have the capacity to overcome these challenges.
That's interesting because a lot of the headlines we see focus on the negatives, the risks.
Right, but Dalio's taking a much longer view, looking at the underlying trends.
And he thinks those trends are still in China's favor.
That's his assessment, yeah.
I mean, it's easy to get caught up in the day-to-day news cycle and miss the bigger picture.
For sure, but Dalio's reminding us to zoom out, to consider the long term.
And in China's case, he's saying, don't underestimate them.
Precisely. Now, this doesn't mean he's ignoring the risks, but he believes they can navigate them.
Okay, so that's China. Let's shift gears again and talk about Dalio's advice for investors.
Okay, what specifically are you thinking of?
Well, he seems to be encouraging a more active approach, moving away from passive index tracking.
Right. He's not a big fan of just riding the market wave.
So why is that? What's his reasoning?
Well, he's worried about market volatility, potential asset bubbles.
So he thinks blindly following the index could be risky in this environment.
Yeah, he's saying don't just buy the S&P 500 and call it a day.
Do your homework, analyze individual companies, be more selective.
Exactly. He's advocating for a more hands-on approach.
So it's all about spreading your risk, being more strategic.
Right. Just like he was saying about diversifying geographically.
Don't put all your eggs in one basket, whether it's a currency or a market sector.
Precisely. It's about being informed, being prepared, and being adaptable.
And this is where Dalio's focus on individual stock analysis comes in.
Right. He's urging investors to look beyond the hype, beyond the headlines.
Really dig into the financials, understand the business model, the long-term potential.
He wants people to be more discerning, not just chase trends.
Yeah, it's like he's calling for a return to a more fundamental approach to investing.
You could say that, one that's grounded in research and analysis.
Okay, so we've talked about China, individual stock analysis, the importance of being prepared.
What else is on your mind?
Well, Dalio also brought up the Fed's balancing act with interest rates.
Right. They're walking a tightrope.
He expects them to stabilize around 3%, which is still historically low, but higher than what we've seen recently.
Yeah, that's going to have some ripple effects for sure.
So what does that mean for the average person? Like, what should we be thinking about?
Well, for one thing, borrowing money is going to get more expensive.
So higher mortgage rates, car loans, that sort of thing.
Right, but it could also mean higher returns on savings accounts and other interest-bearing investments.
Okay, so it's a mixed bag, good for savers, maybe not so great for borrowers.
It really depends on your individual circumstances and your financial goals.
Which, again, reinforces Dalio's point about being proactive and taking control of your finances.
Right, understand how these economic shifts might affect you and adjust your strategy accordingly.
Okay, so we're seeing a theme here. Be informed, be prepared, be adaptable.
That's Dalio in a nutshell.
This has been a really insightful discussion so far. I'm learning a lot.
Me too. It's always fascinating to delve into Dalio's perspective.
What did you find most striking about his outlook?
I think what struck me the most is his emphasis on individual responsibility.
Yeah, he's not just pointing out the problems, he's empowering us to take action.
Exactly. He's saying, here's what's happening, here's what you can do about it.
He's not a doomsayer. He's offering a roadmap, a way to navigate these choppy waters.
And I think that's a really powerful message, especially in these uncertain times.
Yeah, it's easy to feel overwhelmed and helpless, but Dalio's reminding us that we have agency.
We have choices. We can shape our own future.
Well said. Now, I know we still need to unpack Dalio's thoughts on currency devaluation.
Yeah, that's the big one, the one you specifically wanted to explore.
And I'm sure our listeners are eager to hear his take on that.
We'll definitely delve into that in the next part of our deep dive.
Excellent. But for now, let's take a quick break. And when we come back, we'll explore what Dalio has to say about the future of money and what it could mean for your financial well-being. Okay, so we've danced around it long enough.
Yeah, it's time to face the music.
Currency devaluation, Dalio seems pretty convinced it's coming.
Yeah, and not just for the US dollar. He's talking about a global phenomenon.
So what makes him so sure? What's his reasoning?
Well, he's got a few key points.
Okay, let's hear them.
First, he's worried about all this money printing.
Right. We talked about that before, central banks going crazy with the printing presses.
And he thinks it's eroding trust in fiat currencies, like the dollar, the euro, the yen.
Because they're not backed by anything real. It's all based on faith.
Exactly. And that faith is starting to waver.
Okay, so that's point one. What else?
Point two, geopolitical tensions. The whole world seems a bit shaky right now.
Yeah, lots of uncertainty, conflict. It's a bit unsettling.
And Dalio thinks this could lead to a shift away from the dollar as the world's reserve currency.
Oh, so other countries might start using something else for trade, for reserves.
It's a possibility, and that would definitely impact the dollar's value.
Okay, I'm starting to see where he's coming from, so point three.
The rise of alternative assets, like gold and even cryptocurrencies.
People are looking for other places to put their money, things that might hold their value better.
Exactly. They're hedging their bets, diversifying away from traditional
Usually
currency.
they're worried about devaluation.
Right. They're not sure if the dollar, the euro, whatever, will be worth as much in the future.
Okay, so Dalio's basically saying the whole system is a bit wobbly.
He thinks it's unsustainable in the long run, heading for a major reset.
A reset? Like, what does that even mean?
He's not entirely clear, but he's hinting at a new paradigm, a new way of thinking about money and value.
Okay, so big changes. But what does this mean for the average person, for me and you?
Well, if he's right, it means less purchasing power. Your money won't go as far.
So things will get more expensive.
Yeah, especially imported goods, travel, anything priced in dollars.
And what about our savings, our investments?
They could lose value too, especially if they're heavily concentrated in dollar-denominated assets.
So we're talking about inflation, but on a global scale.
Potentially, yeah. It's a bit scary to think about.
It is. I mean, most people don't want to dwell on this kind of stuff. It's too overwhelming.
Understandable, but I think Dalio's point is that we need to be aware, to be prepared.
So what does he suggest we do? How do we protect ourselves?
Well, as we discussed before, diversification is key.
Spread your risk. Don't put all your eggs in one basket.
Exactly. Invest in different asset classes, different currencies, different geographic regions.
So don't panic and sell everything, but be strategic.
Right. Think of it as hedging your bets, preparing for different scenarios.
What about gold? He mentioned that before.
Yeah, he sees it as a potential safe haven, a hedge against inflation and currency devaluation.
And what about cryptocurrencies? He seems a bit hesitant about those.
He's acknowledged their potential, but he's also cautious about their volatility.
So be open to new possibilities, but do your research, understand the risks.
Exactly. This isn't about blindly following trends. It's about being informed.
Okay, so diversification, alternative assets. But I keep coming back to this idea of individual responsibility.
Yeah, Dalio really emphasizes that.
It's easy to feel like these economic forces are beyond our control.
Like we're just passengers on a runaway train.
But he's saying we have more agency than we think.
We have choices. We can take action. We can shape our own destinies.
It's a message of empowerment, a call to be proactive.
Exactly. To understand the trends, to make informed decisions, to take ownership of our financial futures.
Wow, this has been quite a deep dive, a bit of a roller coaster ride.
It has. Dalio is not afraid to challenge the status quo.
But he's not just a pessimist. He's offering solutions, a roadmap for navigating these uncertain times.
And I think that's what makes his work so compelling. It's thought-provoking, it's challenging, but it's also empowering.
Well said. Well, I want to thank you for guiding us through Dalio's world.
It's been my pleasure, and I always enjoy these conversations.
And I know our listeners appreciate your insights, your ability to break down these complex topics.
I hope so. My goal is always to make economics accessible and understandable.
And you've definitely succeeded. So to everyone listening, we hope you found this deep dive valuable and thought-provoking.
Remember, knowledge is power. Stay curious, stay informed, and stay engaged.
The world is changing rapidly, but we can adapt, we can thrive.
Thanks for joining us, and until next time, keep diving deep.